What is going on, Alpha Hunters? It is a terrific Thursday, and we're not really seeing much action on the market. So this gives us a little bit of time today to kind of look at some things, see what's kind of going on. Not just talking about the market, just ripping it day after day after day. So it's kind of nice when you get the breather days because these are the days where you can really kind of figure out what's kind of going on. So we had a little bit of a gap down today, nothing crazy. Did pump there in the first 30 minutes. We rolled over there for about 2 hours or an hour and a half, barely more about an hour and a half. And then we had a nice little hour run. And then we pulled back for about the last hour and a half. Very, very subtle, nothing crazy. So that's really kind of the flow of the day. But it hasn't been anything crazy from the low of the day to the high. It's all been within about a 0.5%. So that's been about the day's range. So you just kind of tells you not much going on, kind of past 2 days really kind of pretty quiet days there on the market. So, all right. Qs, kind of same thing, a little bit more ripped there to the upside in the mid, going into midday. All right. Fair enough. Qs a little bit underperforming the SP 500, which is really kind of interesting because the AAPL actually outpacing. Nice little gap up here on AAPL. So I'm kind of curious why the Qs are actually down more. So we'll go take a look at some things. IWM, though, for how much the IWM has been crushing life this week. I mean, we got a little bit of a gap down, about 0.4% of a gap down there on the IWM. You see it down about 0.17 or so, but it got down around 2% today. Yikes. What is the deal? Honestly, I think it was just more of a technical area. It was really kind of getting up into these previous kind of resistance support zones. It had ripped it pretty good, especially on Tuesday. So it makes sense. Has a little bit of a pullback resting day. I think we kind of mentioned yesterday, anything into this area is probably going to be a pretty good buy up. I would imagine it pushes higher. Maybe it rolls over later on, comes and fills this gap later on. But I imagine it probably breaks this wick. Maybe here over the next week or two. Goes up maybe to like 185, 190 area, and then it comes back down later on. But IWM has been crushing it, just not today. Getting kind of crushed. So DIA, Dow Jones Industrial Average, nice sell down. Not really so much of that rip there. Not really so much of that bullish trend that we got going into midday. Okay, RSP, equal SP 500, pulling back basically since the open. Kind of down with those data lows. Kind of looks like the IWM a little bit. Just not as bad. But same kind of deal. Threw a nice little upper wick yesterday. Kind of getting up into those spots of some good support and resistance areas. So pretty good. Pretty good move there. Especially after Tuesday. It also ripped it pretty well. All right. So that's the equal weight SP 500. So just start to look through. Okay, how's the VIX doing? VIX, interesting. Throwing a little bit of a lower wick there. Looks like it dropped off pretty good this morning. Had a pretty good drop off here, and then it bounced. Okay. Really kind of interesting. I mean, we haven't seen like crazy bearishness, but I mean, we are down very minorly. Nothing crazy. Dollar index kind of hanging out. Throwing a nice little lower wick today. I'll be watching the dollar and yields. Nice bounce here after the first hour. So first hour of the trading day, we got down pretty good, and then we bounced pretty good. Definitely off those lows. We did not break yesterday's low either. So this is a pretty important spot. We haven't gotten through this level yet. So be curious to see how, if we do eventually just consolidate here and then we break down. If we like bounce one day and then we come back down, kind of like check into that moving average and then come back down, that would look pretty bearish. So if we do see that would be a pretty bearish sign. Probably continue down. So we'll see what that looks like going forward. But for now, not really doing a whole lot. GLD GLD having a pretty good day. Gold, all right, having a pretty good day. I really kind of thought it would go lower. Maybe it still will, but having a good day today. And the dollar's not really doing much, so that's kind of interesting. 10-year yield. Okay, so the yields have not made a new low compared to yesterday. Not yet. They got close. They are getting close. They are hanging on. At least they're on the 10-year. How's the 20-year? So we're going to have a 20-year treasury auction on Monday. Apparently, it's going to be kind of big. Now, the reason why I only bring that up is because, well, treasury auctions have not really been going that well over the past several months. And you can see, we're seeing some pretty good uptrends over the past couple of months. So now that inflation seems like it's been beat, the Fed even kind of mentioning, like, kind of trumpeting their successful campaign of raising interest rates to get inflation down. You can see November 1st, and even the CPI report from Tuesday, that we've had yields kind of drop off, kind of at the lower levels. The thing, though, is now that all that's done, it's not like we're continuing to break down or push lower. So if we kind of base out here, we're kind of doing it a little bit here on the 20-year yield, and if we, on the 30-year yield, kind of doing that as well. So if we get to Monday and the treasury auction doesn't go well and it starts to push back higher, especially on the longer terms, like the 10, 20, and the 30, that is something that might start to spook investors again. Because, I mean, if people aren't buying treasuries and treasuries are continuing to push higher, then we are going to have higher interest rates, right? And it doesn't even matter about inflation. And I don't know why the market reacted so strongly as it did to inflation data anyways, but that's not my decision. It's the market. It is what it is. So HYG kind of hanging out as well. LQD pushing higher. Makes sense. Bond yields, longer term bond yields are down. So that does make sense. How about the TLT? TLT pushing up a little bit. Got a nice little uptrend here. Just kind of wanted to see how this is going to set in. So we got a nice little uptrend here. Yeah, looks okay. It is kind of like a flag pattern. Kind of looks like a flag pattern, but I don't know. It looks. I mean, it's just an uptrend. That's all it is. We'll see what happens when we kind of break up or break down. How that kind of sets up, but at least the TLT up on the day. All right. So let's take a look at that sector rotation and let's kind of see what is going on, because we got some things moving pretty good. So sector performance on the day. All right, so sector performance on the day. Utilities. Remember, utilities were actually lagging behind pretty good yesterday. Interesting to see them up 1% on the day. That's interesting. All right. Tech, real estate, materials, communications, financials, healthcare, in line with the market, industrials, staples, and discretionaries. Interesting. Kind of trading there together. Energy is really getting hit, down 2.5%. All right. Let's take out the gap, see what we got here. So tech, communications leading the way on the intraday buying. Utilities, materials, real estate, financials, staples, healthcare, industrials, and discretionaries. Okay. Discretionaries is really kind of fallen off here over the past 40 minutes or so. Energies, yeah, energy's been hit throughout the day. Just been hit throughout the day. Okay. Let's go take a look at said energies, commodities and stuff like that. So CL, let's take a look at crude oil. Ooh, crude oil. So we had contract roll this morning, last night, however you want to say that. Ew. Yeah, That's a stinger, man. Wow. What? What? 8 o'clock. Is there a major energy report? I won't have it on this. All right, so there must have been some major report or something. Let's see what do we got here. The squeeze is on for home builder. Short sellers don't care. WTO falls to 4-month lows. Can you just tell me why very quickly? Futures fell nearly 4%, below $74 barrel on Thursday, to the lowest level since July, amid increasing signs of low demand and eased concerns of scarce supply. Yeah, I mean we've been talking about that one for a while, right? One of those is going to have to give is either going to be crude oil or is going to be gasoline. And gasoline, typically the demand side does not give, right? If you're not seeing demand, typically, you know, you're going to see the other side catch up first. And we were not seeing gasoline be strong and supportive of crude oil as it continued to go higher over the month of September, really August and September. And so we were seeing that. Let me just add it here. I'll just add it as a line chart. Boom, RB. There we go. Boom. So yeah, you can see we really kind of got off the same kind of trajectory there in late August when we had this contract roll, right? When we had this contract roll, that was about the time where we kind of deviated there. And then gasoline really started dropping. Crude oil continued to go higher. And, you know, we were kind of talking about that. It's like, yeah. So supply side, which is the crude oil side, is most likely going to give up and drop in prices because the demand side, the gasoline side, is not being strong. Demand always wins out. Demand always wins out. So, rather interesting because if I mean we're seeing weak price action here on commodities because of demand. I mean, maybe that's why we're seeing some underperformance there on discretionary staples. So crude oil not doing well, gasoline not doing well, heating oil imagine probably not doing well. It's not as bad, definitely not as bad. So it's down pretty good, but it hasn't broken the lows from over the past week, so that's not as bad. I want to check. No, I'm not going to worry about that. I'll check on that in a little bit. But yeah, there we go. Home heating oil not doing the best. Any kind of major updates here? Stock retreats from rally as Fed doubts creep in. That's. I mean, we're not seeing a major stock retreat, so that's just a headline to make headlines. It's not even important. Two of America's biggest retailers sound a holiday warning. So, you know, over the past like 2 days, we've had Target and Walmart give earnings. I would definitely say you want to dig into that a little bit because the stocks on both of those kind of reacted completely different. Walmart got hit pretty good. Target bounced pretty good. I don't think Target. I think that was just a sell opportunity on the Target bounce. Corporate greed is fading. Okay. Is that like something Target's saying? I'm not going to click on that article. I don't really see anything crazy out there as far as like headlines. So, yeah, I'd just say it's a good day to do homework. Let's go do it. So, we got crude oil. Or I don't want to do that. I want to do RB. Tell you what. Which one did I do it here? So 32.59. It is continuing to drop. So I did heating oil first. So heating oil. Oh man, I didn't mean to do that. Heating oil by RB. There we go. So heating oil actually over the past few days has been performing a little bit better than gasoline. But I mean, this is still very much uh, applicable. So yeah, I guess it'd be okay. I don't know why this circle keeps getting larger. That's what I'm looking at. This circle just keeps getting larger as I zoom in on it. All right. Anyways, so one of the things that's kind of I've been thinking about here all over the past couple days, and I wanted to kind of think about it before I even said this on the live stream, but there's two main reasons why we have not seen that bear market continue yet. We have not seen that recession. We have not seen that bear market. And one of them, it comes down to stimulus. Like last August, year ago August of 22, we had two stimulus packages passed in the U.S. There was the CHIPS Act and there was the Inflation Reduction Act, and that it just spurred the spending by some of these companies to go get those like reimbursements, and that's where I think on the shorter term, over the next several months, it kind of helps stimulate the economy and the market. Now, another thing that has continued though is really the trade war. And this is something that I kind of mentioned last year. I just didn't know how the impacts of it were going to be, and I think we've seen it now. So factory orders. I don't. United States factory orders excluding transportation. Let's see if this is it. So one of the things that's kind of interesting, this looks okay, is the factory orders have continued to actually hold up pretty good throughout the past several months. And a big reason why is last year we had that trade issue and that trade dispute or trade issue with China, right? We stopped, we had more of the trade falling out with China. I know Biden's meeting with China's president, if you want to call him president, dictator, whatever you want to call him, meeting with him this week, right? So the issue that kind of came from the trade dispute is, it's not an issue. I mean, it kind of depends on which way you look at it, but that allowed a lot of manufacturing and production factory orders to come back to the U.S. And this is where this has helped the U.S. economy avoid that ever so sought after recession that there's been a lot of economists calling for that. I don't really care to call for recession because I don't know. I'm not an economist. It's not really a big deal to me. I just trade price. I don't trade economics. But this is something that if we do make like amends with China, right? And we go back to manufacturing a lot of things in China, this is where I do think the US would go into a recession because I'm not saying it's going to happen on a dime where you would see a lot of manufacturing go back to China. I think there's going to be a lot of diversification, probably stay in the US for a good period of time. Like they're going to really, like a lot of people are going to really have to slowly make sure that, moving manufacturing back to China would be the smart business decision, and that it's not just a short-term thing. So this is where I think this continued to kind of help spur the U.S. economy, and why a lot of people have been wrong, absolutely wrong, on calling for a recession, and why the economics in the U.S. are not as bad as many people have expected them to be for a good part of 2023. You know, but as we go into 2024, and are we going to continue to see manufacturing orders kind of trend up or hold up at these elevated levels? I don't know. I would kind of doubt that. I would kind of doubt that, but I mean, I don't know. I don't I don't get into the economics that much. I would doubt that they hold as high as they are. I'd imagine the companies and the sectors and the businesses that needed to move manufacturing here because they weren't allowed to make stuff in China anymore. I'd imagine they probably are going to have the manufacturing back in the U.S. by then. So I could see a recession possibly, but yeah, that's kind of all I wanted to say about that. It's just kind of two things that really have kind of helped alleviate economic pressure, and one reason why the market has continued to hold up pretty well. So we'll see. And I mean, I'm still not bullish. Still not bullish. I don't like this. I don't like how we've gotten, but it is what it is, man. It is what it is. Let's look through some stocks. So AAPL, interesting. Nice move higher. Nice little upper wick. Snag this high. Did we fill this gap? We did fill this gap. So we filled this earnings gap back from August today. Okay. So we filled that earnings gap and it's come back down, snagging that high from September as well. This is probably the dumbest investment to put your money into right now. And I mean that wholeheartedly. I would absolutely not invest anything into Apple. I'm not saying don't trade it. It's a great trading instrument. It's great liquidity, all that kind of stuff. But I would not invest anything into it. I think AAPL might be a great asset to actually do the wheel strategy on, because I don't really see major downside, but I don't see major upside either. And they have this AAPL has a lot of inherent volatility already kind of baked into it. So I would absolutely be looking to do the wheel strategy on this. I don't like the upside though. It's not like Microsoft. You can definitely tell Microsoft's ripping. Had a little bit of a kind of conference thing, or showed off some new products last night, is what I saw. I didn't look too much into it, but they did show off some things. Something about a new semiconductor chip I think they're going to use for AI. But yeah, nice move there on Microsoft. I've said it before. This is going to be like, if you're betting, this would be one of the few ones I would have bet on out of big tech is Microsoft, and I wouldn't bet against it. And that's kind of one thing that's tough about if you're ever trying to be bearish on the market. You got to look at like the top few stocks, and if you're not bearish on the top market weighted stocks, or there's no reason to be bearish on the market. Alphabet. How's Alphabet doing? Alphabet having a nice climb day, up 1.77%. This thing has really kind of surprised me. I didn't really think it would just climb as much as it has over really the past month since the earnings, or the last few days, or a few days after earnings, I guess. Nice jump this morning, and then it's kind of just hanging out up there. Yeah, earnings traded down for like 2 days, and then like people just took the opportunity to buy it up. Okay, Meta. Still don't care for Zuckerberg. I don't care what they do. Defies EU. Okay, hold on. Meta defies EU Digital Markets Act amid soaring stock success. Surged 9% for November. All right. interesting. That's a little too much of a lawyer speak for me. Meta though, man, not looking too bad. Amazon, how's Amazon doing? Amazon gap down. Got a nice bump in the first 30 minutes. That was about it. Okay, how about Tesla? Tesla, nice. Gap down, nice trade lower, down 4.25%. Man, that is brutal. That is brutal. Allie, what's going on? Explain the market bullish. One more. Need one more. Bullish. Hold on. No, I read that wrong. Please explain this bullshit market to me one more time. I don't know. I can't explain bullshit, man. You put in grain and out comes bullshit. That's the process of a cow. I guess. That's bullshit. I mean, the market is what it is. It's fine. I mean, I guess in what bullshit and which manner of bullshit are you talking about? Like price action or economics or what? I'm just curious on which part of the market you're talking about. So, Nvidia, how's Nvidia doing today? Nvidia's gonna have earnings here Tuesday coming up. Everything. I think the only two things that have really kind of helped the market this year has been the stimulus that was introduced a little bit over a year ago, back in August of 22, and then the Chinese trade war. The Chinese trade war has kind of helped the American economy stay afloat because a lot of manufacturing moved back to the U.S. So, I mean, those are the two things that have kind of helped it up, but helped the U.S. kind of avoid an economic drop-off, like into a recession that many people have been calling for the past year. I don't really care to call for recession. That does not what bothers me. What bothers me, or the reason why I'm not bullish, is this. I'm just... Oops. Didn't mean to grab that. It's this. I mean, there's nothing I got. I mean, the markets do what they always do. They just, what the hell ever they want, really. I mean, I got nothing. What's really kind of interesting, I was just kind of looking at this when I got on the live stream, but this time period looks very similar, right? Back to the beginning of 22, where you had, of several months of declines, all the way into mid-March, and then we got this really sharp rally. Well, we just had like 3 months of declines. Hold on, when did we top out? So, basically, okay, so August, September, October, basically into the end of October. Let me do this. Let me do this. I'm gonna grab this candlestick pattern because this looks very interesting. Bars pattern. So there. Let me just go to here. Let me just grab all that. I'm gonna overlay this. So last year was definitely more bearish. To start out. The other thing I wanted to look at is from that low. So like that, I mean, that low, that rip that we had like last year in March, I mean, look at how almost accurate that is. I mean, would you be willing to be more bullish now? I don't know. I mean, these two kind of pullbacks kind of line up almost time-wise. It's just that last year was a little bit more bearish. And part of the reason why last year was more bearish was because Russia invaded Ukraine in that February, which is this drop right here, this candle drop. So, but we did get that rip there. So, and that almost matches up to it. So, yeah, I don't know. I mean, if we start a new downtrend, I mean, and I said it like last week. I was like, man, this feels like a bear market rally because it was just so violent. So, if we start to see it just kind of fade down, get back under 430, that would be big time. Feels more bullish. Special the big caps are at all time highs. Big caps all time highs. Well, that's not entirely true, right? I mean, that's not entirely true. I'm going to go to weekly and we can just look back to the past couple of years here. I'm gonna get rid of there we go. Get rid of COVID. So AAPL. So AAPL is kind of at all time highs. I know it had a pretty good pullback here in the summer. I mean, we can say that it's up there. Microsoft's definitely it's at an all time highs today. So Microsoft, yes. Alphabet, not quite. It hasn't even gotten back to its high from late 2021. Although the past 3 weeks have looked pretty good. And then Meta. And Meta definitely has not, but it's getting close. Meta has climbed a lot this year. I don't trust Zuckerberg, so do what you want with that one. Amazon. Amazon has not gotten back there. Still pretty good distance away. Tesla, TSLA, still pretty good distance away. So there's a few of them. There's a couple of them that are kind of in that ballpark. Microsoft obviously is at all-time highs. Apple had that pullback in the summer, not quite there. Google still hasn't gotten back to its 2021 highs. Meta also hasn't had a massive pullback last year. I mean, you can take a look at Netflix. Netflix not quite back there yet because they had a really bad 2022. Let's see, Nvidia, we know it's all-time highs. So yeah, I mean, Nvidia is crushing, but AMD's not. AMD's not there, right? AMD's not there. Intel, I'm not even gonna throw Intel into big tech, but I mean, they got rocked pretty good, 2021 to 2022. A little bit different play here. They pay a pretty good dividend compared to the others. So, so there's that. Who else? Let's look at the heat map. Who else? That's Tesla, Amazon. Yeah, I mean that's the big ones. Say Walmart. Walmart was just at all-time highs. Yeah, right before earnings, Walmart was at all-time highs. So it was there as well. Consumer was doing really well. Speaking of Walmart, let's just take a look at what went on here because they got shellacked. And kind of yesterday we were talking about Target. Like, this is a really good sell spot. You just got to see how it sets up. And I still kind of believe that. I think Target is more of a better bearish play here. And I think what I would probably be more willing to do is just trail up the daily lows. And then once it breaks those daily lows, like trigger that for an entry. And then have your stop loss somewhere up here around 140 or like 139 and a half or above these highs. And then just kind of maybe layer it in, kind of see what happens here. I think Target comes back down. They're not that great. Walmart, though, this was interesting. So, corporate results weigh on U.S. equities with jobless claims rise. Did we get jobless this morning? No, we didn't. We didn't get jobless this morning. Oh, that's another one, Cisco. So I had two people bring up Cisco last night. Oh, we did. Ray's like, yeah, we did, man. Why don't you know your shit? I'm sorry, Ray. Why don't you get on my face, bro? No, I'm kidding. Yeah, I didn't realize we got jobless this morning. Why is it not on my freaking list? Because that's more what I want to know. Why is jobless not on my list? All right, well, that's good. I'll look at this later, see whatever I need to freaking add in to get jobless on there. It's usually on there, so I don't know why it wasn't. Um, so I wonder. So that's probably why energy's dropped off this morning. Then, if we got jobless, which I guess kind of makes sense. I don't know. I don't know. I can take a look at some other things. Cisco though, I wonder what they said. Like, I had two people hit me up last night. Like, oh my god, did you see Cisco's down like 10%? And it's down 11.6%. How's it traded intraday? Oh, it was a very quick, sharp drop right on the open. It's mostly chopped sideways today. All right. New Street down. Whoa. New Street downgrades Cisco to neutral from buy. Cuts price target to 48. Damn, from 64. That is a massive downgrade. I mean, dang. Hold on, I'm doing the calculator math real quick. That's a 25% reduction on price there. That is huge. That is big time. Well, that sucks. Kind of curious. So Cisco and Walmart both trending. Makes sense. They're both mega movers today. Cisco stock dips on Q1 slowdown. Full year guidance cut. Wow. Share stumble outlook misses. Estimates after pullback in orders. Pullback in orders. Wow. So cutting guidance, yeah, that's never a good thing. You don't want to do that. And Walmart also did that. So let's take a look at Walmart. So Walmart also did that. Yeah, cautious guidance. That's what I saw last night. So yeah, that's a tunk. That's a tough one. Yeah, I'll be really interesting. I kind of liked how that beginning of the year, first half of the year, was kind of overlaying from 22 overlaid onto this kind of pattern. Be curious to see if we just kind of slowly chop down. So Monday we're gonna get a treasury auction. We're gonna get a treasury auction on the 20-year note for the treasury, and if you have been paying attention to the markets, there's been some volatility in the markets when we've gotten treasury auctions. Like we saw some pretty good sell-offs over the past couple of weeks. I believe this one on the 9th. Yep, this one on the 9th. We had a pretty good sell down into the end of the day. So if treasury auctions start to go bad, that might be another thing that puts yields back up, pushes yields back up higher. And I mean, what's equities going to do if yields go back up to that? Man, where are we? Upper fours up to the 5% type area if they climb. So that, I mean, it's just going to be interesting to see. I think there's a pretty short window here. You want to see if you want to see yields kind of drop off. The other thing though is any kind of breakdown really here on the near term, maybe today, tomorrow. I mean, you're going to come right into these kind of support levels here on yields. So maybe not like going to look to be a solid breakdown and then going into Monday. Or maybe we see that breakdown happen early Monday, and then when we get to auction time on Monday, we're seeing yields bounce up a little bit. So, yeah, I'd be curious to see how that kind of plays out. Let me know if there's anything you guys want to take a look at. As far as what's going on across the market, there's not a whole lot that's really perking my interest. We've had some pretty good gaps from retailers. Target gapping up pretty good, Walmart gapping down pretty good. Take a look at Exxon. Take a look at these energies. So they sold down pretty good, getting back down to a pretty good support level down here. I kind of thought back here in this time frame, back in the summer, we were going to kind of roll down. We tried to, and then kind of got below this support level, and then we just bounced. And that was when crude oil was rallying pretty good. That was the crude oil rally. This time, it seems like demand is really starting to really take control of the energies. Just energy commodities and energy stocks. HYG, copper. Okay, I just wanted to see what copper was doing real quick. Chevron. Make a Tesla forecast. I can't make a Tesla forecast. You want to know why? To me, the business going to still get hit on oh man, Chevron's getting smashed. Chevron's getting down to like last year kind of lows. Okay. So Tesla, you want to talk about Tesla? All right, let's talk about Tesla. So the thing about Tesla is the fanboys in the stock. I don't like trading stocks where there's fanboys. Fanboys, fangirls, whatever. I'm just speaking in generalities. Due to it's too emotional for them, or they're overly emotional, and it's not really about trading the stock itself. It's about being loyal to the company, I guess. Anyways, this is something that was going on back in early of the year, back in this time period, or even like back in December last year, when they had said that they were going to reduce prices on their vehicles, on the Tesla vehicles, right? This is when they first were mentioning that, and that's why we got this crazy wipeout. And one of the reasons why we got that is because everybody knew what was coming next. That was margin compression, right? And margin compression was coming. One of the things that we got though in April, May here was Tesla made deals with GM and Ford, which sent the stock back higher for the electric charging station, right? For the superchargers. So that was a good deal, obviously, for Tesla. But they've continued to cut prices on cars. And this past earnings, Elon Musk talked a lot about, interest rates, consumers getting loans, that kind of stuff. Like he was really concerned about interest rates, because that's how people pay for cars, right? People most of the time, I won't say most of the time, people get loans to buy houses and cars, and I would say that's about the norm. Do people buy cars in cash? Yeah, all right, I would agree with that, but I'd say most of the time people most likely are gonna get loans. And if interest rates are higher, then it's not even just about the price of the car. Now it's about the price of the loan, right? So, what do you think? Where will we be in the index at the end of the year? That's a great question. I don't think we're going to be higher. I still think this was the high. Late July, August. I think that was the high. I still think that. I know we ripped it pretty good here over the past 2.5 months, but I mean, we've seen inflation come down steadily over the past year. So inflation coming down over the last CPI report didn't mean anything to me. Like, what did that didn't mean anything. So I don't think the market's going to continue to rally in December based on the CPI report for November, even if CPI does come down, like it's been trending down over the past year. So that's kind of my take on CPI. So that's going to be one factor, right? Because you're going to get CPI in December. And so I mean, I could just see us fade back down for the to close out the year because I didn't see us ripping this hard. I kind of thought we might push up this high, but I thought it'd be like maybe beginning of December, right? When I kind of drew this out a couple weeks ago, where we kind of ride up higher, we kind of pull back, we kind of push back higher. We do something like this, and then we start to kind of fall off. I still think we might see something like that, but it's just the peak happened a lot earlier than what I thought. So, I mean, we just kind of more did something like this. So, what if we start to just do something like that? We just start to chop back down. Now, I'm not big on the market's going to be in a new bull market. I'm not sideways to slightly down. I mean, how much? How much of a pullback would this be? This is only 4.5%, 4.5, 5%. I mean, that's not a big deal. I don't think we'll get below this this number of 408. I don't think that happens. So we won't get back down there. But I don't see us getting over this. Maybe the Qs do. Because they got really freaking close yesterday. Getting over that mid-July high, they got really close yesterday. So maybe the Qs wick over it one day, but if yields start to climb, I think it's going to be really difficult for the market to continue to push higher, even if it wants to. It's going to be really difficult. So, I mean, it's I've been a broken record for the past like 6 months about yields. Like, continue to watch yields, man. They continue to climb. Ever since about this time period right here. When we got this move and there was sideways consolidation right here, I was like, yep, watch the yields, man. So, I mean, it sucks. This bear market sucks, by the way. I really hate it. Bear market sucks. Everyone's different, man. But this one has been an outlier, a massive outlier in every way possible. And I know why, but you don't see it until it kind of happens. But yeah, I mean, I don't know. I don't see why we would go higher. I think too many people were caught bearish here. This is a massive short squeeze that we got. And yeah, I mean, it's kind of what happens, right? You just get those bear market rallies because people were bearish. People got overly bearish on this breakdown in the second half of October, overly bearish. And then it just popped the other direction, right? You got that squeeze that typically happens when the market gets overly bearish. Too many people are lined up bearish. Will I be wrong? Does the market come take out this high? Yeah, sure, fine. Doesn't mean anything to me. I still think we'll come back down. So and it really sucks because I want this to be kind of over. I really didn't think we would take this long, but it is what it is. I've learned a lot this year. Learned a lot. Ten-year yield, man. The other thing that would be kind of an issue, though, also in the market is if China and U.S. kind of got their trade back to normal, that would be a problem, I think, for the U.S. market, right? For the U.S. economy, and that might freak people out because I think all that manufacturing data that we've seen that's been really positive, I think that would start to leave. I think that would start to really die off in a very bad way. But, I mean, it wouldn't happen all in one go. So, yeah, I don't know. It's going to be an interesting end of the year. I mean, we might also see the market just push a little bit higher due to the simple fact of it's end of year. You're gonna have to do positioning. Um, I don't know if there's gonna be any major reasons to sell, unless the only one reason is yields, and people keep saying they're buying bonds. Like people are overly bullish on bonds right now, massively bullish on bonds, and that's one. If I mean, and that's where it's tough. Like, are they bullish on the yield rate they're getting, or are they bullish on the bond prices? That's a big deal. Yeah, Nvidia does report next week. Good call. That obviously will be the last earnings season factor. Nvidia. Oh, that one in AVGO. I know they're going to be up here in a couple of weeks as well. December 7th. But yeah, Nvidia would be the big one. So Nvidia reports. I wonder if. What do you wonder if it will come back to? It will. Just give it time. Just give it time. The thing that worries me about Nvidia, I'm not gonna lie. The thing that worries me about Nvidia will influence market next week for sure. Yeah, no, I completely agree with you. But the thing that worries me about Nvidia right now is how many people are getting into semiconductors, and I'm not even talking about like chip phones. I'm talking like real big time AI, you know, warehouse type semiconductors. Like obviously AMD is trying to catch up. Microsoft just showed off theirs last night. Amazon's been doing theirs. So it's like that's more and more companies, people, whatever, starting to do their own things with semiconductors. Tesla's been developing theirs, right? They moved away from using Nvidia a couple years ago, or they were trying to. I think they actually did. So that is something about Nvidia that kind of bothers me. Now, Nvidia, the one thing that Nvidia is really good at, and this is where they're really good at, it's not so much the semiconductor. It's kind of like the AI programming. That's where they did it really well, because they have the programming that kind of also went along with the semiconductor. It's not like Microsoft can't catch up in that real quick. It's not like Alphabet can't catch up in that real quick, because those are the two largest, software companies in the world. So, yeah, it's interesting, man. It's such an interesting space. Look at that move on Intel. Dang. Intel's up 6.4% today. Man, did they come out with an AI chip last night too? It looks like they did. Jesus. Yeah, that's crazy. That's a crazy move. And this is where it just sometimes it just pays to be patient, man. I don't know if he's here, Diet Cola. He probably isn't. He hasn't been around the live stream. I need to whoop that dude's butt. No, I'm kidding. I don't need to whoop his butt. But he was wanting to know about being bullish on Intel, when it came into this level. And I was like, yes, absolutely. Just look long term. Look out 2 years. And it's going to be choppy. It's going to suck. But, dude, just do it, and you'll be fine. Up 55% since it first entered into that area September of 22. Who wouldn't want to be up 55% over the past 14 months? Yeah, 55% is a pretty good year. It's a pretty good year, man. Sometimes you just got to look long term. Realize the opportunities that are at that you have. And yeah, this is the area, this zone, super good zone to be bullish. I would say right here's maybe not the best zone because you're coming into a lot of this kind of area in this 43, 42 to 44, 45 type area. There's going to be a lot of resistance. A lot of people are going to be selling, trying to sell here. It's not the best spot, especially after like this month. I mean, this month Intel's up 18%. So, Ali said there are moves in this market like 2021, but this time meme stocks are big caps. I wouldn't necessarily say that because I mean, one of the big ones back from then was AMC, right? AMC had that huge pop in 2021, and it's now below that period, right? It's below that period. GME has GME got below that period? No, but it keeps just fading off. Just keeps fading off. I want to see that movie about this Dumb Money with Seth Rogen. I want to see that movie. But yeah, it's it's crazy, man. It's crazy. Tesla over that time period, I know it topped out last year. Well, actually, it topped out in late 2021. But yeah, I mean, it's coming down, kind of. Had a nice little bounce this year. I don't. Yeah, I don't know. This is an interesting one. It really is. This is a very interesting one. Like, I don't root against the company, but I think the more I research or more stuff I see about electric vehicles, the more I kind of don't think they're the answer, the long term answer. Um, and what is it? Internal combustion, hydrogen internal combustion. That looks very appealing, and the infrastructure for the most part is there. So that looks rather interesting. So, anyways, Tesla, man, I don't know. I got no takes here. Like I think the stock will probably go down, but there's too much fanboyism in this that if Elon Musk sneezes out of his right nostril, they take it as a good thing, and they buy the hell out of the stock. It's just crazy. I'm not saying Elon Musk is not smart, man. He's great, very smart guy, but there's been a lot of automakers this earnings season say that electric vehicles are not our solution, essentially. So, Outfunders, I'm gonna get out of here. I'll get that midday recap out there. I know it's gonna be kind of a short one, but we'll see how this week ends out and what to look for as we go into the weekend and into Monday. Because Monday we're gonna have a very important treasury auction, and we'll see if how well that goes on Monday. But maybe we start to see some signs of things start to give tomorrow. Outfunders, have a great rest of the day. Take care.